In the stock market, as in life, those who persevere will be the ones who come out on top. Tony Robbins. My friends, we just ask 10 to 15 minutes each and every day. Now, as we look at the way this year is ending for us, because of course markets are closed on Monday for the New Year's celebration, they'll be opened up on Tuesday again. We see things pulling back a little bit on the S&P 500, just 0.29%. But does that spark the end of the Santa Claus rally? Well, we've seen some red candles in this latest run-up. Again, we can go back quite a ways as things have been running up on this half-day chart. Now, as we look at the two-day that finished drawing today, the high was 477.55. The prior high on the prior two-day candle, 476.66. Of course, on the weekly, the prior high was 475.90. This week, 477.55. So again, moving up. The half-day chart is the one that we count on the least, but it shows us what's going on intraday. And we had a little bit of a pullback. Does that mean everything's over? No, it doesn't. I am paying attention to the volume that's continuing to decrease on the weekly chart. Now, the two-day did pop up nicely as far as volume goes over these last 2 days. But we can see in the down move, we've got decent volume, a little above average, a little further above average in the afternoon. So we'll just continue to watch, wait and see. This has been a phenomenal trade. And my friends, it sets up with the pattern that we look for. Now, does this pattern always mean things are going to go up or down when you see this pattern or the inverse? No, it doesn't necessarily mean that, but it sure gives us a lot to look forward to when we see it, because we see it work again and again. And what do we see? Well, we saw higher than average volume with this red down candle, and then we saw things switch over to the green spinning top, means lots of indecision in a different direction. And then what happened from there? Of course, we had this latest up move. We can go back in time, find this again, back on the prior up move. Now, if you only want to trade up moves, then of course you'd be looking for this pattern. You can find times when it occurs, well, when it looks like it might occur, like here, average volume on the down, but then we didn't have average volume here, and of course it was a short little fake out. Then things started to move over and moved down for a while. You saw things topping with average volume and then a little above average volume going down. We had enough room there for a down move to do okay. And then, of course, we had this latest up move. So we are looking for those kinds of Heikin-Ashi candle setups with volume to support it. And, oh, by the way, great training in the show notes today for you. It's from the book, actually from the book that I've been working on for quite a while, and I think that you will like it. You will find it helpful. It's just things to look at, look for, so that you don't make the typical mistakes that anyone can make. 10 really good things for you to keep an eye on. And in fact, the name of the training is, let's see here. I know I've got it in the show notes. Here we go. Navigating the Minefield, How to Dodge Common Trading Pitfalls for Sustained Success. A little bit of alliteration there. So anyway, I think you will enjoy it. If you're not subscribed, go to chartingwealth.com, sign up for free. Doesn't cost you anything. That list is never spam, never shared. You should all be subscribed there at chartingwealth.com. And again, if you're listening to the video and haven't hit subscribe at YouTube, please go ahead and do that for us. Helps us with our metrics to grow our channel. And of course, share it with friends. And if you really appreciate what we do here, hey, why not bless us and you at the beginning of this year, ending of this year, beginning of the new year, depending on when you're listening to this, and become a Patreon supporter. First thing you'll get is Charting Made Simple. Well, no, Options Made Simple, the Charting Wealth Way. We've got all sorts of charting wealth ways, but this is options, and you'll get a kick out of that. So this is what we see going on with the S&P 500 pulling back a little bit. Let's look at the NASDAQ 100. We see it likewise pulling back, again, 0.43% as compared with 0.29% on the S&P. So not much. We've seen that happen before and in this latest up move. But of course, I mean, we can see where things are topping there, but moving a little higher this week. Again, stair-stepping up. We can see the decreasing volume, and on the 2-day, decreasing volume. About average on the half-day chart. So we'll continue to watch. Pay attention as we jump into the new year. What goes up at some point has to come down. Let's look at 20-year bonds. They are down for the day also, more than stocks at 0.90%. Again, reaching a higher high. We look at the high on the 2-day, the prior high for the Tuesday-Wednesday candle, 153. This 157, so it did get a little bit higher there too. But we can see this down move for the last day and a half. So again, keep our eye on things. Same kind of thing we saw here with 20-year bonds. They moved down, higher than average volume we saw on those prior 2 candles. Then the telltale green spinning top with higher than average volume. See, it's higher than the low there. And that sort of ginned things up to take off. And of course, if you've not taken our volume training, I'll re-release that again. I think you can find it at chartingwealth.com under trainings. You'll get a lot out of that. We really talk about how to read volume, what volume tells you. It's the real secret sauce in charting. So many people leave that out, or they just simply don't understand it, nor do they understand Heikin-Ashi candlesticks, which are our second real key. Price movement and volume. If you can understand those, you'll be well on your way to being a market master. And then the only other thing you have to do, my friends, is control your losses. Remember how we do that. We use our 2-day chart and the average true range to set our loss limit. And then what happens when we hit that profit limit at one time, the 2-day average true range? We sell half our position and we let the rest of it ride. And it is beautiful. So you limit your losses and you run out your profits. Is that not the smartest way to do it? Well, do the math on that. We don't ask you to believe anything we say here. We ask you simply to practice trade with us. See if it does not work. Let's move on to gold. Pulling back just a little bit, 0.16%. Look at where it's staying now. Doesn't mean it ain't going to blow through this next week. I haven't trusted this up move ever since this one died. Now you can see how it, and again, not an exciting up move. Why? Because of course we had things move over to head down, and then look at that when it turned around on low volume. What did it do? Popped up a little bit and then died. Didn't have the volume to carry it through. Popped up to this purple line, which heretofore had been another stopping point for gold. Pushed a little bit above it and then rolled back over and then started to take off again on weak volume. We didn't bite on that one either, and is sitting right there. Now, it could go up. If it does, hey, more power to gold and to the folks that are in it, but it's not going to be me. I want things that are much more sure of moving in the right direction. I don't want to be a bettor because the house always wins. I want to be a winner. Okay, that's why we don't take unnecessary risk. That's why we limit our losses. That's why we let our profits ride. Okay. Let's look lastly at Bitcoin. Down for the day, our big downer, 1.87%. That's not a big down day for Bitcoin, but you can see where the half-day chart is pushing through the weekly trend line, 2-day chart. At least the wick is pushing through it, and we ended up with a doji, lots of indecision. As we talked about before, Bitcoin kept pushing up here. You know, each day it tried to push up, each week it tried to push up a little higher. Then it bounded up. Now it's starting to deteriorate. And of course, that's what we've seen before in these other moves when it got ready to go down. Don't know that it's going to go down, but we're watching, waiting, and seeing. We haven't penetrated the weekly trend line on the weekly chart. This red, of course, volume simply means that it opened the week lower than it closed the last week. It doesn't mean negative volume. So make sure you understand how to read that, and you learn that, of course, in our volume training. That is where we are, my friends. Hope that you had a wonderful Christmas, that you're looking forward to a great new year. Hope that you're going to spend a little bit of time determining what it is you want to do financially, well, in every other way, relationally, spiritually, physically, mentally, all of it. But particularly when it comes to your finances here, I hope that you're going to dedicate yourself 10 to 15 minutes each and every day learning how to chart these markets. There's some crazy times coming, and I want you to be prepared for them. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.